Welcome. You're watching Money, Money, Money. I'm Sumaira Abdi. Now, we've been discussing how you can earn, save and spend better. But there is a stage that should be preceding any of these, and that is safeguarding your ability to earn. Now, we've often heard of life and health insurance. Most of us even have these policies. In fact, many of us have several of these policies. But few of us know about the concept of disability insurance. These schemes cover the policyholder against death or disability due to an accident. Why do you need it? Well, Harshvardhan Roongta of Roongta Securities joins in for the motion. We actually don't have anyone who's going to be opposing it, but also joining us today, armed with questions, our Perizad and Hanos Mogrelia, and we also have with us Mihir Parekh. In fact, Mihir, I want to begin this show by asking you, because I believe you were in an accident in 2010. I'm glad to see that things are much better now. But what happened and how did it impact you financially?
It was a car accident. It happened in the month of May. It did take my life behind, and I was bedridden for about 5 months, and that took a toll on my work and my financial stability. My hand is yet not functioning as it's supposed to. It is something that bothers me.
And you did not have disability cover?
I did not have disability cover.
Okay, so Harshvardhan, do you think Mihir's problems, at least financially, could have been mitigated if he had disability cover? What exactly is disability cover, and how would his life have been different if he had it?
Well, Sumaira, if we go into the details, if we go into statistics, every 1 minute there is one fatal accident in the country. Right now, even now, while we speak, we will have by the end of the show about 30 fatal accidents. Now, statistics also say 1 in 4 accidents lead to death. So, on an average, 25% leads to death. What about the 75%? So, Mihir is one of such people who've been into a fatal accident and has survived. So, in case of a disability insurance, there are particular provisions given in, like if in case an accident leads to death, then there is an X amount of money which is paid out. If an accident leads to a permanent disability, to a total permanent disability, then another set of amount is paid out. So similarly, Mihir just mentioned that he was bedridden for about 5 months. So there is a provision within this plan which pays out about 5,000 rupees a week for the number of weeks that you are disabled, that you are completely bedridden, and up to a maximum of 100 weeks. So in this case, he would have been paid out 5,000 rupees per week for the 5 months or 6 months that he was disabled.
Alright, so the understanding is that perhaps every person who has the ability to earn or who is earning should actually be buying a cover similar to this. But what about you, Perizad and Hanos? You're high net worth individuals. Have you ever been advised to buy disability cover?
We are insured. We have provided for the future, but what happened to me here, if it was to happen to me, I mean, I would have no clue what to do next. I mean,
you would have really not known what to do. In fact, the thing that comes to my mind is how come we were not told about this earlier? Had we known, I'm sure because we have kids, they are going to school, then what about their later higher education? I can't even imagine.
And he's the only earning member, right? So
That's
it
right.
therefore becomes a bigger problem for you guys.
That's right.
But Harshvardhan, how does a plan like this protect individuals and families such as Perizad and Hanos?
We say if you wish to protect yourself in an absolutely necessary manner, and that is your term insurance policy. What does a term insurance policy do? In case of demise of an earning member, a lump sum is paid out to the surviving members so that can be used to generate regular income. What happens in a situation where a person meets with an accident but does not die and is permanently disabled, is incapacitated to do anything else? He's just like a vegetable at the house. So what happens? The life insurance policy is not paid out anything there because there is no death. However, all your expenses continue. In this case, the children's education continues. In this case, your EMIs continue, your day-to-day expenses continue. So it's a situation living dead. It's not death, but it's the situation living dead. Therefore, these kind of plans fit into those areas. They fill in those vacuums wherein if a person has been disabled due to accident, then a corpus similar to the kind it is for your term insurance is paid out to you in your own hand. So life insurance you take for the benefits of your surviving members. In case of personal accident, disability insurance, you take it for your own self.
My question is, I had almost lost my hand. What if I lost it? What if I did not have a limb? What happens in that case?
Yeah. So in this case particularly, as I mentioned, there are different, the variability in which a payment has been made out is directly proportionate to the loss that a person incurs. So in this case, because he's got injury on his one hand and he almost lost his one hand, if it was to happen, and assuming that he'd taken a 1 crore cover, suppose you've taken a 1 crore cover, because this is a partial total disability. So there is only one limb which you would have lost permanently. So 50% of the sum insured, so which is in this case 1 crore sum insured, you would be paid 50 lakhs to you. So there's a degree. If you've lost 2 limbs, then 100%. If you've taken an insurance of 1 crore would be paid out.
So then does a person who buys this disability insurance, is this an add-on to a Mediclaim policy? Does he then not need a Mediclaim policy, or does he still require one?
Absolutely not. He has to buy a Mediclaim policy. There is no substitute to a Mediclaim policy. In Mihir's case, when he met with an accident, he was hospitalized. So hospitalization expenses are not going to be covered by your personal accident policy. The accident insurance covers only the loss of income due to accident. So because he was disabled, there is a loss of income which is compensated in the form of accident policy.
So how do we know how much cover we should be having?
What is ideal?
What is ideal?
Well, see, the logics and the calculation would probably replicate how would you decide a term insurance cover. Typically, if you say that you have a monthly expense of about say 50,000 rupees a month, that's what your minimum expenses are going to be. You need to have a deposit in a bank to the extent of 1 crore. So if you have a 1 crore deposit at post-tax returns of 6%, it's about 50,000 rupees a month. 6 lakhs a year, it's 50,000 rupees a month. So it's a similar situation. If you need 50,000 rupees every month, you need to have a 1 crore cover. So that in case of disability, the insurance company, total disability that I'm talking about, the insurance policy pays out 1 crore to you while you're alive. That money can be parked into a fixed deposit, and the returns that you generate post-tax 6% is equivalent to 6 lakhs a year, which is 50,000 rupees a month. In case you need 1 lakh every month minimum, then you need to have a cover of 2 crores in that sense.
Alright, so you have to go backwards. But on that note, we absolutely have to take a quick break, but our guests are going to stay on with us. Up next, we'll actually tell you how and where you can go about buying your disability insurance policy and the fine print that you need to watch out for. Stay with us, we'll be back in a bit. Welcome back. You're watching Money, Money, Money. Our topic today, dealing with disability insurance, is a little bit grim, but the benefits of disability insurance are sure to bring you some relief at least. In our studio today, we have Harshvardhan Roongta, Mihir Parekh, and on my right, we have Perizad and Hanuz Mogrelia. So we've been talking about the benefits of having a disability insurance, but how much does it cost actually, and where can one go about buying it?
Well, Sumaya, the cost is extremely reasonable. I mean, if you look at a 1 crore cover, it comes at a cost, a premium of 12,000 rupees per annum. So that's about 1,000 rupees a month for a coverage of 1 crore. So if you take the cost benefit analysis, the peace of mind that you buy with this kind of money is much more than the entertainment value that we have per month. The money that we spend over weekends over just for movies is far more than the coverage that we have and the peace of mind that and the security that we have for our family members.
So mere pennies actually, if you see the kind of benefits that it has. But I want to ask you guys one question. I believe you also had a home loan, so you must have been asked to take on some term insurance. Were you ever asked to take any additional insurance besides that?
No, the logic was simple. There's a 45 lakh loan. You take a 45 lakh term insurance and you're sorted. If anything happens to you, that insurance will take care of the loan. That was the logic. I mean,
but
that's
in reality, does it work like that, Harshvardhan? Or should people now at least actively be taking on disability insurance, at least when they take on big ticket loans?
See, when you take a housing loan, a term policy is something that you must take. Because the idea is, in case you're not there, the money needs to be paid to the housing loan, housing finance company. Sure. However, having said that, term insurance is one element. You need to also take the disability insurance. The reason being, if you are disabled because of an accident, and accidents could occur to anybody, irrespective of the health status that you're in, irrespective of your age, caste and creed. So if you were to meet with an accident which leaves you incapacitated, the housing loan EMIs continue. Your term insurance has still not got activated because you're still alive.
Right.
It will get into effect only after you pass away. So what happens in that stage where you're neither here nor there? Your EMIs continue and that need to be paid. And that is why you need to have disability insurance.
Now that I'm convinced that I'm gonna get this policy for me, my question is, there are fine prints in policies which need to be taken care of, which need to be known. What fine prints do we need to take care of?
If you're talking about disability insurance, because disability due to accident, you have to understand what accident is. So it is very clearly defined. An accident is an event, a damage which is caused, an injury which is caused due to external, visible, violent force. So you need to keep in mind, if there is some injury, and you may claim it to be an accident, but it has to be fitting into the definition of visible, violent, external force. If that is so, then the payment is made out. And obviously you have to keep in mind that the claim needs to be filed in a particular format within a particular time limit. So if all that happens, then there is no reason why a claim should not be paid.
I have a fractured foot. Could I have claimed some disability?
Well, you would, if you would have an insurance, disability insurance coverage and you were bedridden, yes, you would be able to claim for up to 5,000 rupees a week for the number of weeks that you were going to be.
Oh, 2 weeks too late.
Oh, so basically understanding how this policy goes, and he's the sole earning member in the family, how would I mean, God forbid a situation comes like that, how do I go about claiming, I mean, how do I claim this policy?
You know, it's important that you equip yourself with the kind of information even right now. Don't wait for a claim to come. You just find out what is the simple processes. The first is, if anything happens to her nose and you are the one who's going to be required to file the claim, the first is you intimate the insurance company that so and so incident has happened on a plain simple letter. You do not need to wait for a format. You just intimate the insurance company that this is the particular policy number that you're referring to, and so incident has happened to your husband, in which you are a nominee, you are the beneficiary, you need to intimate them, and whatever further requirements are there, they will then take over from there. They will send you forms, they will send you a checklist, such as a police report, if there is, because it's an accident, we're talking about a report to be filed with the police, a hospital report. So they then give you a list of documents that you need to submit back to them. Most important is, you need to file this information with the insurance company within some specific time. However, if you've missed that date, there is no problem, but there has to be a reasonable cause. I mean, you need to inform, you need to justify why it has not been informed to them earlier.
So the next time, actually, when you hear investment companies say read the document, you actually need to be reading that document. And we also need to thank you here, Perizad, Hanos, Mihir. Thanks very much for joining in today. Harshvardhan, you'll have to stay on a little bit more because some fun and games still remain on the show. But before we take a quick break, here's a few nuggets of information. Now, just like with stocks, where many retail investors think that penny stocks are cheap and that stocks with triple-digit prices are expensive, many investors also have a tendency to opt for mutual fund schemes with lower NAVs. Did you know that lower or higher NAVs of similar type of schemes of different mutual funds have no relevance whatsoever? It's very likely that a better managed scheme with a higher NAV may be giving you better returns. Conversely, you may get a larger number of units with lower NAVs, but that scheme may not be giving you better returns if it is not managed efficiently. On that note, we'll take a quick break. Up next, we'll return with our viewer call-in segment, Can I Afford It? Stay with us. Welcome back. You're watching Money, Money, Money. Now, systematic investment plans, or SIPs as the name suggests, are systematic schemes that help us set aside some savings regularly before we splurge it all. Well, that sounds like a great way to invest, but is it as efficient, or is that just a myth? Manasvi Gilani is here with Mythbusters.
Well, that's right, Sumera. SIP investments are considered safe and systematic, but do they always give you positive returns? Well, the answer to that is no. And in a volatile market like ours, we have to have a sum of at least 5 years to make some real handsome money on the SIP investment we make. Secondly, SIPs are considered to be friends of small investors or salary class people. Well, that's a clear misconception, because if you're making 5 lakhs a month also, you can invest in an SIP. You just have to instruct your bank in case of ECS, as the upper limit for ECS payments is 25,000 per installment. Lastly, SIPs are considered as tax-saving instruments and with a lock-in period of 3 years. So if you think that you can make a real buck here, And very quick, that's a clear no-no, because you have to wait for your last installment also to complete 3 years before you can withdraw any money. So keep your priorities in mind and take a wise investment decision. With that, it's over to you.
Alright, Manasvi, thanks very much for that. But guys, having said that, SIPs still remain the singularly most advised method of investing. So go ahead, benefit from that ongoing hope rally. Well, it's time now for Can I Afford It? If you're looking for a bit of extravagance in your life, well, we're the people to call and our expert will tell you if you can afford it or not. So first up, Rakesh Arora calls us from Kanpur. Hi Rakesh, how can we help you?
Me and my wife have a family income of 1.5 lakhs and our monthly expenditure is 55,000. Also, we have a home loan EMI of 25,000 and we contribute 10,000 in mutual funds and 25,000 in PPF. We both have life covers from our respective offices. So can we, with this income, can we afford to renovate our home?
Okay, so how much is this renovation going to cost you and how are you planning to pay for it?
It should be ballpark 1 lakh rupees and we'll pay that amount from our annual bonus, which should exceed 1.5 lakh rupees.
Okay. Harshvardhan, is it as simple as it sounds? Can we give them the approval?
Yes, you can go ahead and get your house renovated. But just a suggestion that you can allocate the entire 1.5 lakhs towards your renovation. The reason being because normally we see that the cost always overshoots than what we originally envisage.
Alright Rakesh, congratulations on the renovation of your home. We have another caller on the line with us. Angie Parikshit calls in from Jodhpur and I believe she wants to study further. Hi Angie, what course are you looking to do?
Hi, I'm currently working in a call center for the last 5 years, but I would like to get an MBA to improve my future prospects. And for that I've saved about 1.7 lakhs already and then borrow another 1 lakh from my parents. So I've already invested about say 65,000 in MBA preparation classes, but since I'm already 28, I was wondering if I can afford to spend this money on the course or should I invest it? Is it too late for me to start investing?
Oh Angie, but before we answer your question, I assume this is the whole and soul of your savings. There are no other investments, right?
No, I just have an EPF and other tax savings which I have done in the last 5 years.
Alright, Harshvardhan, we have to give her an approval. We just have to.
Well Angie, I would say that you can go ahead and definitely pursue your further studies because there is no better investments than investing into your own education. Well, please go ahead and I wish you all the best.
Alright, and all the best to you as well from my side, Angie. Finally, we have an email that has been sent to us by Sharmila Kadam, who writes to us from Pune. She writes saying that when she got married recently, her husband and she had paid for the entire wedding from their savings and are therefore left with very little in terms of investment. So they're quite prudent, they say, about spending and not unduly worried about collecting a corpus all over again. However, with their monthly income of a little over 1 lakh and expenses bordering on about 50,000 a month, can they afford to buy a car by taking on a loan? So Harshvardhan, I don't have the amount of money they want to spend on a car, but given their profile, do you think they could afford to be a little bit extravagant?
Well, I'm sorry, but I would have to deny this. The reason being because they have just spent all their life savings into their marriage. So it's about time that they, instead of taking on an EMI on themselves, they basically build up an emergency corpus to sustain at least 3 to 6 months of their monthly expenses. So I'm sorry, I would have to deny it.
Oh, Sharmila, but we wish you all the very best to start off with on your newly married life. But here's where we need to wrap up on the show. Harshvardhan, thank you so much for being the part of the show. Always a pleasure speaking with you. But viewers, do remember, if you would like your friends or your family to be featured here, you can write to us on money@network18online.com. You can also find us on Twitter. Write to CNBC TV-18 News and use the hashtag money. We'll see you again next week. Until then, do remember that everything, and I mean everything, ends up taking more time and more money than you had initially budgeted for. That can't be helped. What can be helped, though, is that you can start investing early and benefit from the magic of compounding. Until next week, bye-bye.